4.5 fully franked. For more on this, we are joined by Thorn Group's Managing Director, John Hughes, right now. And John, thank you so much for joining us on the program. We do appreciate it. First of all, can you give us a bit more of an update on the appetite for credit at the moment, since that is at the heart of your business?
I think there's a recent report that spelled out fairly clearly from KPMG that it's fairly subdued for both consumers and also for business. And where some people were expecting a big surge post the election, I think there's going to be probably a fairly lagged effect for some time until there is a regeneration of confidence within the marketplace.
What do you see could be behind a regeneration in confidence? Have you got any catalysts in mind?
Oh, not really, other than the period of time that we've gone through relative to negative sentiment, and it takes a long while for that to change. It's not something that will happen instantaneously, and it's just that general lagged effect that tends to happen within the economy under these sorts of circumstances.
Okay, let's get down to the result. You've got a lift in revenue but a drop off in profit, so we can put a lot of this down to some of the restructuring costs, or I guess diversification costs, because you have changed strategy a little, is that right?
Correct. I mean, we came out to the market 18 months ago and said that we were going to be going through a period of subdued profitability in growth. And we, I think, took a fairly brave step at that time relative to some reinvention of the organisation and restructuring to create a broader-based financial services organisation. We commented to the market that we still saw good top-line growth, but that there would be additional costs relative to what we were doing on our new initiatives, and the result today really bears that out. We have got good, strong growth within radio rentals and record performance there. We've had good growth in our other areas of business, but of course the costs associated with building a provision or provisioning for the growth of loan books, etc., always takes and creates an impact, along with the investment in systems and people. So again, for this full year result, which will come out at end of March, or for the period end of March 2014, we've again suggested that it'll be a flat result versus the prior year, which would suggest that the second half will be slightly stronger than the first. And then looking forward to mid-long term, where we'll start to see the benefit of all the investment and all the hard work that we've put in for the last 18 months to 2 years.
Let's talk about why you went for this diversification strategy in the first place.
Yeah, our core business, domestic rental, we saw that as being a very good, solid base for expansion. We saw the opportunity, particularly in the mid-prime market that used to be the heartland of organisations such as your Avcos, your AGCs and a number of others, and we believe that there's quite an underserviced market within the economy. And I think the results so far relative to our Cash First, Thorn Money, Thorn Equipment Finance and the book builds that we're doing there certainly bear that out. And indications within the market is that there is a good size opportunity there to be taken advantage of into the future. So we're pleased with that, but of course there's always a situation about reinvention of organisations, and it takes a fairly brave step to recognise where an opportunity is and then make those investments, because of the marketplace is always looking for growth after growth after growth. We went through 5 years of spectacular 20% plus growth, but for long-term shareholder value and returns, we believed we needed to make that investment and take advantage of the opportunity in that mid-prime market.
Okay, but you're done now? No more acquisitions or significant growth plans outside of what you've outlined on the table?
Nothing planned at this point in time.
Okay, great. And just to finish off, if you could give us a bit of an outlook, I guess, for the credit markets and businesses like yourself going forward. You mentioned that things have remained subdued. We haven't seen that post-election bounce many were hoping for. How do you see things tracking over the next year or so?
I think you might see a bit of a recovery post about March, April of next year. There'll certainly be a good test relative to lead up into Christmas, but not just in sales. It'll be interesting to see what happens in retail profitability.
Okay, thank you so much, John Hughes, Managing Director of Thorn Group. Appreciate you joining us on the channel. Let's move